Why would anyone consider a reverse mortgage over a traditional cash out refinance? Hey everyone, Taryn Proctor here, president of Retirement Home Equity Advisors. So quite often, and especially more recently, with home values spiking in the last few years, we have folks call in who have been pulling cash out of their home over and over via a traditional cash out refi. And the next thing you know, they either no longer qualify to cash out anymore the traditional way, or they wouldn't be able to comfortably afford another cash out refi. And it isn't until this time that they finally consider a reverse mortgage. And then to make matters worse, many times because these folks have pulled out much of the equity out of their home, they no longer even qualify for a reverse mortgage either. So of course, I want to prevent this from continuing to happen, but also for those who may not ever even be in that situation, we'll be discussing in this video why you should also consider a reverse mortgage in the first place, especially when you're also considering a traditional cash out refinance. And just to be clear, I'm not saying that you should do a reverse mortgage. That is, of course, something that only you can decide for yourself. But what I am saying is it is absolutely something that should be considered along with the traditional cash out route, because you actually might discover that a reverse mortgage is a much better option for yourself. And worst case scenario, you spend some additional time learning about a new financial product that you just may not ever wind up using. So let's get to it. Now, first, I think it's an important fact to point out that a reverse mortgage is actually just another type of cash out refinance. It just has different features that a traditional mortgage doesn't have. And what I would argue that the biggest benefit a reverse mortgage has that a traditional mortgage does not have is much more flexibility. And that flexibility mainly comes from two features of the loan. Number one, I'm sure many of you know that a reverse mortgage doesn't require a monthly payment. But what many are not aware of is you can actually make a payment if you'd like. You can pay what you want, when you want, as often as you want. This alone provides an abundance of flexibility over the traditional cash out refi. Now, you may be asking yourself, why would I want to make payments if I don't have to? Well, because some people don't like the idea of having an increasing loan balance over time. And if you choose not to make payments on a reverse mortgage, that is the inevitable result. So by continuing to make payments, depending on how much you choose to pay, this will either keep that loan balance at bay or will even continue decreasing it over time. But having that flexibility to halt payments at any time in the future for any reason is certainly a huge, huge benefit. Now, this brings us to the second feature of the loan that makes a reverse mortgage much more flexible than a traditional cash out refinance, and also why you may want to consider making payments towards the reverse. This feature is called a line of credit. Now, with a reverse mortgage, you have the ability to structure any remaining proceeds that you may receive from the loan in a line of credit. The benefits of the line of credit are vast, and many would actually say that this feature of the loan in and of itself is what gives the loan any credence when it comes to retirement planning and financial management. So first, a reverse mortgage line of credit, it somewhat acts like a home equity line of credit in the sense that the proceeds that you leave in the line of credit will not be charged interest until money is actually pulled out. This not only can save borrowers a ton when it comes to interest like a HELOC does, but what is unlike a HELOC is that money is guaranteed to you by the federal government. That line of credit, it cannot be canceled, frozen, or reduced as long as your loan is in good standing. And not only will you not be charged interest on the money that's left in this line of credit, but actually the opposite will begin to occur. Now, what I mean by that is the line of credit has what's called a growth factor built into it. That means that whatever money is left in your line of credit will begin growing at the same rate that your loan balance is charged for interest and mortgage insurance. Now, if you recall, we were discussing why you may want to continue making payments towards the reverse. Well, the absolute best reason is because when you make a payment towards a reverse mortgage, not only is that payment going to go towards paying the interest, mortgage insurance, and your principal balance, but dollar for dollar, what you pay at any given time will also go into your line of credit and will then begin growing with the rest of the money that you may have in there. And at any time in the future, you can re-borrow or pull back out any money you had ever paid into it. So with a reverse mortgage, you may be able to initially pull out or establish a line of credit from the get-go, but also if you choose to make payments, you'll continue growing that line of credit for future use. In essence, using this strategy ensures that a reverse mortgage may very well be the last cash out refinance you will ever have to do, because once established, and if you continue making payments over the years, you can simply withdraw any money back out whenever you'd like without the cost of continuing to refinance. And again, while still having the added benefit of being able to halt payments at any time in the future if need be. Now, finally, it wouldn't be fair of me to not include in this video that there are, of course, features of a traditional cash out refinance that may be more beneficial to you than a reverse. And that's why it's always incredibly important to discuss both options with an experienced professional. Those features would mainly be, number one, your interest rate. You may be able to get a lower interest rate with a regular mortgage. However, that's not always going to be the case, and it's going to be dependent on your credit score, your debt to income, and loan to value ratios, whereas those things are not even taken into consideration when it comes to your interest rate on a reverse mortgage. And second, closing costs. Typically, a reverse mortgage is going to have different closing costs than you're used to seeing on a conventional loan. These closing costs are somewhat similar to what you would see on other regular government-backed mortgages, mortgages like a VA loan or a regular FHA mortgage. These government-backed loans typically come with some type of insurance or cost for the government backing. And reverse mortgages come with something called mortgage insurance. And although this is a huge consumer protection, it does bring additional costs to the loan that some people determine is not worthwhile for them. And lastly, reverse mortgages have regulations requiring the home to remain your primary residence. For folks that plan on remaining in their home for the rest of their lives, this is not necessarily a problem. But for some who may be unsure if they'd like to sell or leave the home in the immediate to near future, this may be something that is not ideal. So with all of that said, the answer to the question of whether you should do a cash out refi or a reverse mortgage is, again, something that only you can answer for yourself. And this is going to depend on which option checks more of your prioritized boxes than the other. My advice here is get as much information as you possibly can. And generally, once you have all the facts, an answer should begin to emerge. But I would never tell a client that a reverse mortgage is absolutely something that they need to do. I'm simply here to educate and put you into a position to where you're able to make a well-informed decision on what may be best for you and your family. And ultimately, to ensure that that decision is made with confidence. So if you have any further questions or would like to learn more about the pros and the cons of a reverse mortgage, definitely give us a call and schedule an education session with us. We are always happy to go over everything with you and let you know what your options are. And if you found this video helpful, don't forget to hit that like and subscribe button. Thanks for watching, everyone. We'll see you next time.